Welcome to the Billion Dollar Banker podcast. I'm your host, Nicole Perrone, and I'm so excited to have branch manager at CrossCountry Mortgage, Rafeal Reyes, here with us today. Welcome.
Thank you, Nicole. Thank you. Appreciate being here. Thank you for the invitation. Billion Dollar Banker. Love the name.
Thanks.
Let's make these billions.
I'm loving what you're doing too, right? Billion's the new million now, I feel like, in this world of inflation. But I'm so excited you took the trip out. Rafeal runs a branch in Queens, in Astoria, Queens, for CrossCountry Mortgage, the Carbon team specifically. And he's just doing amazing things online and with his group. And we wanted to have him here today just to get to know him a little bit better and have him talk to us about what his leadership style, his sales success. And we've been chopping it up here for a little bit, talking about a whole lot of things that luckily weren't recorded. So it won't get out there. But can you tell us about your journey in the mortgage industry and how you got started?
Yeah, sure. Thank you, Nicole. And we talked a lot. I mean, you're a brilliant mind, and we're very lucky to have you here at CrossCountry.
Oh, thanks.
Definitely bringing, it's like a breath of fresh air talking to you. So we get it. Yeah. So no one goes to school to become a mortgage banker, right? I don't think they have these degrees out there.
No doubt.
Come from very humble beginnings, single parent household. Grew up in a few different places, Astoria, Uptown Manhattan, lived there for a little while. My mom used to work at a retailer by the name of Woolworth. So
okay.
You're too young to remember.
No, I know Woolworth.
You know
that
Woolworth?
was like, I think they had one in, they might have had one in Asbury Park, I think.
Yeah. Oh, no.
Possibly.
No, so they're
No?
gone. Yeah.
Long time ago.
Long time.
Okay.
I'm older than you
New
think.
York.
Yeah. So my mom used to work there. She used to be like a little clerk. She was assaulted by some shoplifters, which is pretty sad. And that caused her to move to Dominican Republic. I was 17 at the time. I got into retail. Really built my business bones at that time because I got promoted as a store manager at a clothing store.
Oh, wow.
So I started understanding numbers and what drives sales. And
early age, too.
Early age, yeah. So that's why I stood behind. Like, she wanted me to go move with her to DR.
Mm-hmm.
And I said, I think I can do it on my own. So from 17, I learned a lot.
Wow.
School of hard knocks, as they say.
Oh, yeah.
And long story short, it was an experience where I understood what made business move. The training that they provided me with was very easy parlayable to pretty much any industry.
That's awesome.
So did that for, 6 or 7 years. Made a few obviously errors at that age. Then we opened. Now
you're in your like mid-20s at that point, almost.
Give or take,
early 20s.
Yeah. And then late 20s, early 30ish, let's call it. We opened up a restaurant in downtown Brooklyn.
Oh, nice.
Yeah.
What kind of food? Dominican?
It was like a little deli, steam table, maybe 5 or 6 dishes, really good sandwiches, like gourmet sandwiches and stuff.
Mm-hmm.
Big error there was that although I understood how to run a clothing store, I had zero clue on how to run a grill. So long story short, I'm here making egg sandwiches and this and that. And I was miserable, going to like these restaurant supply chains at 5 a.m. and
trying to
loading
get
it.
the
Oh my God, it was just nuts. So the location was great. It was right across from BAM, and at the time they were building Barclays. So really on Flatbush Avenue, very. I know you're in Jersey, but it's a very.
I know, that's like Brooklyn. Flatbush,
downtown Brooklyn. Yeah. So we were there about a year and a half. It was more of a real estate play because I ended up getting the lease, and I kind of felt like that corner at some point was going to be developed. And I was just incredibly early. So one day, me and my wife, we just woke up. I just can't do this anymore. It's just a tough business. And we just closed the gates. Like, we gave away all the sodas to the church, the food.
There you go. You gave back at least.
And then we were just kind of like, all right, what now? And I heard at the time, people were killing it in the mortgage industry. And
do you remember how you heard that? Like, was it a friend of yours?
It was through a friend of a friend,
okay.
Yeah. So I'm like, all right, and then I met with the guy. He pulls up in a, big BMW, and I'm like, what the hell just happened? Like, it's like the world just flew you by, right? You work in this restaurant, you're there, making sandwiches, and you're head down working, and now people are making all this money. I'm like, shoot, yeah, I want to do that.
Yep.
So I just got into the business and started off at Nationwide Equities in Valley Stream. A lot of good friends I still have, actually, that we still have in the industry. And basically the instruction were, here's a list, here's a phone.
Go make it happen.
Go make it happen.
That's great. And you never forget how you started, right? What were some of the early the early mentors you had, how did they train you on the business other than picking up the phone? What are some other things that like just are foundation to who you are as a professional today in that atmosphere in mortgage specifically?
I think it was really, you're gonna get out of it what you put into it, right?
Yeah.
And you gotta get in, when you get into this business, you can't have any fear. Like there's no formalized training program on how to, at the time it was stated loans, right?
Yeah.
So it was like anything closed.
Yeah.
And I was like, wow, that's weird, man. Like some people are buying these houses, they don't gotta even show a pay stub. Like it was, to me, I was like, unbelievable.
You even knew it then. You were like, something's going on.
I'm
here.
like, look at this mortgage payment, $6,000. I mean, people are making this kind of money. And long story short, 3 months later, the market crashed. And
now, what year was this? Was this like
right around 08,
07,
08?
Yeah, okay.
Yeah. And now, here we were.
Yeah.
So it was treacherous, but I think that was a good thing for
Good
me
lesson,
personally,
right?
because a lot of guys who were making all the money kind of left the business.
Yeah.
And that left room for us to, all I knew at that point was not very much. So I kind of started with evaluating income, because at the time then we started to provide pay stubs, and we had all the qualified mortgage stuff and all that.
It's like one of the biggest changes. Yeah. And then we had to start getting licensed. And,
yeah, correct.
And it's interesting because I think the way you learn a business is what really sticks with you, right? So when you learn a business is like, oh, this is easy, I'm making money hand over fist, versus like, okay, you had a little taste of that, like what might be possible, but then you had to come up as a new loan officer in a very difficult market, one of the most challenging ones, right? Yeah. Licensing changes and guideline changes. And so then how long did you stay where you were, and what did you do next? Yeah,
so nationwide we were there. I mean, obviously that group split up, Okay. I mean, a lot of people exited the business. There's still some there, still some in the business per se. But then from there we just kind of each went our separate ways. I went to a different shop, and just kind of again head down and connected with a few professionals. I like to work with CPAs. I think we kind of understand well the self-employed borrower and what they need to do in order to really enhance their wealth through real estate. So I met a couple good accountants, and then it kind of took off from there.
That's great.
Opened up a branch in Astoria, a very small branch, right around 09.
Okay.
And just kind of kept plugging away at it. So.
And now you're here at CrossCountry. You're running a team. You're a successful loan officer here on the Carbon team. And how did you end up how did you land here? What made you choose CrossCountry?
I mean, I think we saw the writing on the wall with the rates. I'll be honest with you. I mean, that was actually good timing. We definitely needed to refresh what we were doing and a little bit more autonomy and get to a place that's a lot more entrepreneurial, right? Where you can control your destiny. Our team is solid. I mean, a bunch of them, our leadership is pretty solid, and our loan officers are top notch, so
no doubt.
It was a very courageous move.
Yeah.
But I'm happy that we did it, because I think we just became way too comfortable where we were.
Yeah.
And we needed to get a little uncomfortable so we can grow.
Yeah.
And that's exactly what we did.
It's crazy because today, when we were talking about this a little bit before, but, comfort's like comfort and doubt are like, they're best friends, like they'll keep you there, and you'll kind of stay in this space where you think you're safe, right? Or everything's going to be okay there. But making that decision to make a move, and it's a big risk. It's a big chance you take on the company, on the team. And part of why we do these podcasts with leaders here at Carbon is to let people get to know you a little bit. And so I want to know about your team. I want to know about you. Tell us about where you guys are today.
Yeah, I mean, look, we're all facing similar challenges. I think that considering the environment, I think we're doing fantastic. I mean, we're outpacing the competition significantly, right? Like most people are down big, and we're actually, in fact, growing in some areas. So I think that's a testament to the culture here at Carbon specifically.
No doubt.
We kind of skate to where the puck is going versus kind of playing defense constantly. So
been saying that for a while. It's a great quote.
It is. I love it. Wayne Gretzky, baby.
Yeah.
But yeah, I think that's what separates us from most, right? It's constant innovation. It's constant tweaking. We're big on DPAL in our shop. DPAL is a $30,000 down payment assistance is a huge come up for our community se. You know,
is that the credit is due?
Credit is due.
That's
what
it
yeah,
is.
yeah. So
that you guys have been lighting it up on that product. Is that something that the competition has? Is that something that you got to be real? You got to know what you're doing. Like, how's it
you gotta. The thing is that it's a tricky product, right? Yep. So you really got to know what you're doing. It's labor intensive. Okay. But you know, a lot of our guys in our shop have been doing it for a long time, even before it actually became popular, right?
Wow.
So now when rates shot up, D-Pal was actually a good product.
Yeah.
Where previously it was kind of neglected.
People stayed away.
Yeah.
From it. Can you tell us a little bit about it for people that don't know about the product?
Yeah, it's a $30,000 credit is due. I'm not the pro at it. Okay. I can get you in the hands of someone who is.
Okay.
But I've done one. It's ultimately it serves as a second mortgage, $30,000.
Okay.
And and you can use that towards your down payment and closing costs. I think very little is required of you. And it's a very flexible program, meaning that, the rate can go as low as 4%, which is kind of unheard of in this marketplace.
Yeah. I saw Pete Kostakis do a post on this, and he was like, I think the rate was like somewhere in the fours with like $30,000 down. And is it just for minorities? Is that how it works?
It is for minorities, correct?
Okay.
Yeah, I mean, ultimately it's a minority program. You have to classify or identify as a minority. But yeah, I think it's a win for a lot of folks out there.
Now, I know you're saying I'm kind of skipping ahead because I'm thinking about it now, but I know you're pioneering home buyer seminars out in the Queens market. And can you tell us about some of the products you'll be talking about out there and how I mean, this is something that I think like when loan officers are out there, they're looking for ways to drum up business and opportunity. And I think like working for a leader who's trying to come up with these opportunities, you could bring in your team and involve them in things like this. I mean, you have the system down, you're using carbon marketing to get it done. Tell us about how you're gonna put this out in market and what some of the products are that you want to discuss.
Yeah, I mean, specifically, I want to really target the Latino community. Like, I feel that, not to take away from other cultures or ethnicities, they work hard, right? And ultimately, they bring a lot of value to our communities. And where we kind of fail them, at least Latino professionals, is in educating them how to make better financial decisions. Like, we all know a lot of wealth is built through real estate, right? Like I specifically, have a lot of Latino clients who they're just regular people, but they've taken certain actions in just buying real estate. And these people are worth in excess of 10, 15, 20 million dollars, some of them.
That's great.
Not doing anything fancy, just being steady. And I think that trying to get that first step in, getting that first foot in the door is critical.
It starts with education, like what you're doing.
We want to build legacies, for communities, and that's what brings satisfaction to my job.
I agree with that. I was just at a NARAB event the other day, and down in South Jersey.
I wasn't invited. No.
Yeah, it's like so far. Dude, it would have been like 3 hours to get there. But no, it's and my fiance's Latina, so it's like obviously. She was saying today, she's like, we don't ask for help. We got to ask questions. Like, we got to ask for help because it is, something where, people in her family want to start, owning homes for the first time. And I was looking at all the stats, like on just ownership and what's coming up. I mean, it's like, it's all moving in the right direction for that community. They're expanding, they're owning more homes. And so, but it's starting with people like you, like on the ground, on the floor, trying to help them. Like, hey, you might not be asking these questions, but I'm here to tell you, like, I mean, these are major programs, like, to be able to get that much money down and get a rate that's so low. A lot of people are on the sidelines and they don't have to be.
Yeah, they're intimidated, and sometimes, sometimes they think the answer is going to be no, when in reality, it just means not right now, right? Like, it's just getting that first initial consultation to say, okay, this is a blueprint. This is the roadmap you need to follow. And in 6 months or 12 months, we'll get you in a home, and that's basically what it takes. It just takes a little bit of motivation and taking that first step.
Yeah, no doubt. So tell us about how, you've been in the business for a long time. You came from humble beginnings, right? Like just self-starter, obviously entrepreneur, really entrepreneurial character. And now you're running a team, you're doing business, you're out there trying to educate the community. But tell us about what you've seen. Like, how have you seen the evolution of the mortgage market in the last decade, and how are you adapting to it and helping your team adapt to it now?
It's a great question. I think the mortgage industry is doing okay, but I don't think it's moving at a speed where other industries where you can like bring in ton of automation.
Yeah.
You know, it's really I think it's a very personal transaction, you know, and
Yeah.
that's probably what maybe prevents it from is preventative of automating a lot of the daily tasks. I mean, people don't understand how much work it takes to put a mortgage to closing.
Yeah.
You know, people think it's just like, oh, here's my documents. No, I mean, there's a whole team behind the scenes, right? You know, pushing all kinds of buttons and papers. So, ultimately, I think it's improved. You know, but I think that I think mortgage people should really be working on the tech. I think if mortgage, I think it's just like tech guys working on, you know what I mean? If we can kind of combine both of these skill sets, I think that we can get a lot further.
Well, you think of like the skill set of a loan officer that started in this business 30 years ago, right? Or the average age of a loan officer today. That I mean, that like you didn't need to know half the things you know today, right? You have to know today. Like the skill set is just different. The skill set of an assistant is different, right? The marketing is different. You do a lot on social today, right? And I think you're doing a great job. You're educational, a lot of educational videos, and we're gonna put Raf's all of his handles and all of his contact information. So if you need to reach him, it'll be in the description. But tell us about how social media is shaping a change in how you're approaching the business.
Yeah, I mean, you know, it's being consistent with the content, which I commend you on that. Like I'm very hot and cold with it and trying to find build the right system for it. But ultimately, I think social media, and we spoke about it a little bit, it's hard to measure what you're getting out of it, right?
Sure.
And ultimately, you know, you kind of lead with love and get the content out there and build that top of mind awareness. But if we could find a way to kind of really measure how many people we're really impacting with our content, that's like the secret sauce.
That's
what
that's what you're doing it for, right? You're doing it to hopefully, I mean, look, it's better than sitting in a room with 10 realtors and talking about a product, right? It's better to get it out on the internet and then email it. And a lot of mortgage companies don't have the capability to do all that. They don't have a marketing team that helps them get the information onto social, get it out into email platforms, and then create a flyer to do a seminar. I mean, just to do that 3-prong approach and then rinse, repeat. I think that's the hard
things, not to interrupt, but one of the things that I'm trying to do now is because digital is so crowded and it's so noisy right now is, you know, my close clients are like, they're like family to me, you know? So what I'm doing, this is the first run at it, but I have a little YouTube channel that we're trying to get off the ground. And shout out to Kelly, by the way, Kelly, our marketing lead.
Yes, Kelly's great.
And so what I'm doing is I'm sending a postcard to my close clients, okay? And not to give away a secret here, but they're gonna
these are the secrets you'll learn when you come talk to us about our team over here.
Exactly. But they scan a QR code. It's basically gonna give the customer an idea of what their home value is, but it's gonna drive them to my YouTube page, where I'm gonna give them some metrics on what home values have done for the first 6 months of 2024. This is what we're seeing. This is why values are going up, and just kind of give them a quick 2-3 minute. So I'm bringing them offline, online, you know? And that's again, our marketing team are the folks to really help get that all done.
Yeah, it's phenomenal to have that help. We were testing out doing some like online webinars and you know, join this free webinar and trying to see how that worked in comparison to doing things in person. And there's all these systems, and you know, it's funny because every time a new marketing platform comes out, it's not like the old one goes away. Like the old one's still there. You still gotta be at networking events. You still gotta do mail, right? Like we were talking about. Those things start to stand out even more when people become way too dependent on, let's say, just social or just email. So I love what you're doing in that space. That's awesome. You know, when you think about your sales strategy, like what have you found to be the most effective sales strategies in the mortgage industry?
That's a great question, Nicole. I mean, look, I think purchasing a home is such a long-winded process, right? Especially now when, you know, we have a tremendous lack of inventory, you know? So a client that you encounter today might not find a home for a year and a half, 2 years, right? We're seeing that. So it's important to kind of stay in front of them as best as we can, right? The phone is obviously your friend, your best friend, but obviously we kind of fail to keep that you know, we
consistent
naturally, we're just human beings, right?
Yeah.
It's just, you have to do it. So I think email is great. I think, again, creating a personal touch of mail, I think, every couple of months, driving them to learn more about what to expect when they're going through that process. You know, I think that's what really clients appreciate.
Yeah.
And that's what separates you from the competition, right?
It's like staying connected, right?
Yeah.
It's just, you got to be in front of them as much as you can.
And then taking a holistic approach to the entire mortgage process is important, right? It's not just the mortgage. It's how are you doing with your retirement accounts?
Yeah.
Like, what's your liquidity like? Are you using your last dime to purchase this home? Like, you know, we don't want you to be a broken toe away from being out of work for 3 months and running into a challenge because you can't pay the mortgage. So you really have to take that holistic approach to helping someone purchase their first home
and working with your customers. Yeah, I love that, especially when you work with a lot of first-time home buyers, I'm assuming, and you're working with accountants who already have like that fiduciary responsibility, so they're counting on you to advise their clients, and I love that. So, you know, when you're thinking about overall like your team and how to keep them motivated, like say if you're looking back at yourself, like getting into this business again for the first time, like how are you driving your team to stay in the game and stay on the field and just keep persevering despite, and this is like one of the biggest challenges, craziest markets we've had cycle wise in a long time. So what are you doing to keep people going?
I mean, look, it's tough. I mean, one of the first things that we did with our team is you gotta just get active, right? Like we had a chat where, you know, who's up early, who's working out, how many calories we burned. I mean, Llewellyn like took it to another level. I mean, if you see Llewellyn now, he's like chiseled up.
Is he?
You know,
he was one of my first interviews that I did when he came here.
Yeah, he's good. So he's like took it to another level, and if you see him now, like it's a part of his lifestyle. So we used the, you know, the challenge of the environment that we were kind of in. I think we're getting out of it now, and use that to really improve ourselves. And you know, you can't improve what you don't measure, right? So like measurements, I think, are incredibly important. How many calls did you make today? How many leads did you get? How many of those converted? How many pre-approvals did, you know, everything is just kind of like, it's very sequential.
Are you tracking that with your team? Do you guys have like something that you use to do that? What?
I mean, you know, to be honest with you, like we should be more consistent with that. You know, it's something that should happen all the time. It should be, it should be like your foundation.
Well, it's one of those things where
some people embrace it, you know,
no doubt,
and then others just, you know, even myself sometimes, right? It's an accountability tool, right? We don't, you know, myself, I say, damn, I failed to fill out my how many calls did I make today? You know what I mean? So it's important that you be honest with yourself and really, you know, and I've, you know, I'm gonna be the first to say that.
Yeah.
You know.
Well, no, I think at the end of the day, it starts with that personal foundation, that like getting yourself right, getting your head straight, getting your workouts in, staying healthy. And I think everything else kind of follows after that, right? It's, if you have that down, then you can it gives you the strength you need to go out and start getting on the phone. And I think tracking what you expect is really critical. And, you know, some of the things I think we do here on the Carbon team, I would love to hear you talk about a little bit, like the meetings. Like what does it look like here if you join the Carbon team? What are the meetings like? What's the oversight of the group look like, and how are they keeping us motivated as a whole? What do you feel from your level?
I mean, I think our meetings are great. I mean, you're on them. You know, the formats are awesome. I think, you know, our leadership brings a different flavor, right? Everyone has their own kind of like style and expertise.
Yes.
You know, Taco Time is a certain way. Benora runs his stuff a different way. You know, he's, you know, very guideline driven, that actually, you know, you're applying these things into your day to day, right? Bringing up blind spots. Hey, there's a program here, there's a program there.
Yeah.
So I think that it's a perfect balance of what you need to run a strong organization from the ground, right? Because once you get to a certain level, you kind of detach to what's happening on the ground.
Yeah.
Luckily for us, you know, our leaders are originators, which you know, really keeps you in tune with what's actually taking place on the ground. You know?
I say that all the time. Like, we're a company started by a loan officer, ran by loan officers, and not just ran by like any loan officer, right? You know, not every loan officer wants to be a leader or wants to grow a team or, you know, support others, but the leaders that we have here that are also producing, it's really truly a benefit to everyone in the organization just to hear them say, hey, I just came across this product or this program, here's what you need to know. Or they're on the street with you, they're doing what you're doing, you're holding hands together out there, like experiencing the same thing. It's not just, hey, go get another deal or go figure it out, or like they know what you're up against. So I absolutely love that. Tell us about like this is kind of like off market, off topic a little bit, but like Queens specifically, like what's that market like? Like what organizations are you a part of? What are you out there doing? And what do you see in the Queens market that you could share with the audience?
Yeah, Queens is interesting. I mean, it's like the melting pot, I call it, of the United States. I mean, I think the last count is like 79 cultures, kind of reside in Queens. Like, don't quote me on the 79, but it's a very diverse mix of people, densely populated. You have condos, co-ops, single family homes, 2-family homes. You have some things that could be classified as suburbs, right? I think now from an inventory perspective, I mean, I did an open house the other day. It was a little quiet. I think we're starting to see things kind of get a little bit more. I think the gap between buyer and seller is starting to narrow a little bit to where we can start to see hopefully things transact. Organizations, I mean, I've been a part of NAREP and things like that. I mean, I really have to get back into the Queens Chamber stuff and do a lot more networking, I think ultimately that's where you and I both kind of excel, right? We like to be belly to belly with people.
Yes, no
so
doubt.
We have to definitely get back out there and start to do those things. So hold me accountable to that, Nicole.
Yeah, I will. I told you I want to go out to some events with you because I think it's such a great way. Like, I mean, I think business is about relationships, and if it's hard because we're so busy, and so sometimes you have one of those days where you're like out at an event and you're like, oh my gosh, I'm going to be working like all night now trying to catch up on things. So I get it. I had a day like that yesterday.
I saw you emailed me that. Oh my God, I feel so bad.
You're like, hello.
All good.
So what else can you tell us about your business and like what, where do most of your referrals come from? Why are people working with you? What do you do that's different?
A good chunk of my business comes from past clients, right? Like it's something that is a testament to how you have worked with your past clients. I really strive to keep that number at least 30% of my business coming from past clients.
That's big.
If that number dips below that, I think I'm doing something wrong. So this year, one of my focuses is really to, provide as much value to my past clients as possible, right? Through mail, through email, through phone calls, educate them on all different things, not just mortgages and real estate, but just bring as much value as I possibly can. Realtors, I work with great teams out there. Obviously, there are some great realtors out there that you consider friends, and
no doubt.
Obviously those folks, support you as best they can. Accountants and financial planners are another part of my mix of business, because I like working with planners and stuff like that as well.
Yeah, no, I think that's a unique one. I think diversifying like where your business is coming from is so key, and it sounds like you have a good mix, which is great because I've seen loan officers that are just like way too realtor heavy, or way too maybe dependent on just their past book of customers. And then, you could see that like, depending on what the market looks like, that can change. Like past clients sometimes can be maybe better in environments where there's more refi demand, and, realtors are great until there's no inventory anymore.
But one thing I'm trying to build now is a direct to consumer approach, more of a own the customer, right? Like, or the client, right? The prospect, because you can rely on realtors and accountants and financial planners and all these things, but it's always better to say, hey, I have a referral for you that I've gained through my marketing efforts, right?
Yes.
And that's something, that's a funnel, a process that we need to build,
That's great.
I haven't seen much of it out there, especially, targeting certain demographics and buyer types,
and getting the customers to us first.
Correct.
There's a couple people at CrossCountry that are doing that, like across the country, not in maybe in our local market, but through seminars, right? Are you seeing that other people here are doing anything that's working in that space?
I think so. I mean, I know one of the top producers in the country. That's that's his, and at our company.
Yeah, that's his system,
does.
Right?
That's his system.
It's like twice a week, right?
He does twice a week. And
is it for realtors though, or
it's for clients? So realtors bring their clients to his workshops, right? So
interesting.
I heard it's like a a rock and roll concert, literally.
Really?
Like, he's got to figure it out. Yeah. So,
Yeah,
you
I see
know,
there's like people checking people in when you walk in.
it's unbelievable. So
that's great.
So that's something. That's how I'm going to start at a more,
ground level
and go from there. But I think consistency is the key to that.
Yeah. What are you seeing with any approaches to getting these offers accepted for first time home buyers? Are you doing anything special or unique
Funny
in that
you
space?
say that.
Yeah.
Oh my God, we didn't even talk about it.
I know we didn't.
Stuff,
I'm
and you
thinking
just kind
about
of
it
asking the questions that I Yeah, I mean, look, I think obviously it's a challenge, and I don't think it's a challenge that we're gonna solve anytime soon unless we have some sort of black swan economic event where millions of people are affected by an economic problem at the same time, right? Similar to 08 or 07,
right?
Which the probability of that is very slim. So, we're underbuilt in this country to the tune of 1 million homes. I think the last we checked, right? And one of the things that I want to really start to educate on is our fast track program, right? So that's something that I offered a realtor 2 days ago.
Tell us about that.
Very hot property, 40 offers.
Wow.
I'm like, and he's like, getting a text from the listing agent, best and final. So imagine a buyer, on the other side of that, they want to move, they're having children, they have their own personal things going on, and you're competing against 40 people to purchase a home.
Jeez.
And so I said, look, let's do a fast track. Let's get them a loan commitment where they're already approved by an underwriter, subject to an appraisal and a title report.
Right.
Right. And I think that holds a lot of weight. It's like a cash offer.
It is, right? Because there's no like hey, take my offer, but like wait to see if I'm approved for my mortgage, right? Because they're already approved in that instance.
Commitment, yeah.
That's awesome. And then you explain to the realtor how to position it.
And you got to get involved, right? Let me call and explain what this is.
Call the listing agent sometimes.
There's two conditions. There's an appraisal and a title report.
That's
and we can get to closing.
And you could close quick in those instances. You don't have to. It's like having a cash offer. So it strengthens their capability.
Absolutely.
How about the Cash Plus program? Are you talking about that at all with anyone yet?
I don't really understand that program, believe it or not, very much. We were talking about it in Jericho the other day, and I got to really
check it out a little bit
further.
Yeah, but I think it's like you could turn a pre-approval into cash pretty much, right?
I think if you have if you own another property, isn't it? I can't.
I think with this one, it's like you have to put at least 20% down, I think, and then you have to put a 10%, I think, earnest money deposit. So that might take a lot of people out of the game right there with the down payment and the earnest money. But then I think you get like some addendum signed, and you're able to make an offer with a certificate from us that says like you have to fast track approve it. Okay. So, but then there's like a certificate that'll come in with it that'll say like, hey, if they can't close on time with this mortgage, like we'll just buy it cash.
Oh, yes.
Yeah.
No, listen. I mean, look how many programs we have here at this company.
It's crazy.
It's like, this is to help.
It's hard to keep up. It really is. But I think that's one of the advantages. I mean, I think the other advantage is that like 90% of what we do, we bank, right? Yeah. So it's not like we're not a broker shop. Were you previously those companies you were with? Were they broker shops or?
Well, you had the ability to broker.
Okay.
But there were also bankers.
Yeah. Yeah. What do you think some of the advantages are of being at a correspondent lender like us versus and banking 90% of your business than being at a broker? What would you say to someone out there that's in that space?
I mean, I haven't. The last time I was in broker space it's been a long time. Yeah. I mean, I think the reason why I would not go to a broker is simply because of the control.
Okay.
Like I would hate to not be able to email my underwriter directly and say, hey, what's going on with this file? Like the other day, I have a bank statement loan that I'm working on, right? Okay. And it's a tricky one. And the underwriter calls me. She's like, look, this is what I'm seeing. Is this and we talked. It took 5 minutes. We talked the file through, right? Instead of 15 emails going back and forth. What's going on here? She called me on Teams and we talked the file through. Okay, Rafael, I'm going to submit for this exception, that exception.
That's great.
And then, now the file is in position to get cleared. So like, great. That stuff you can't really put a price on, right?
No doubt.
Yeah. So
you get more control than, you're not having to deal with like an account executive or I think I've heard that like if you're going a broker channel, right, and then the deal for some reason doesn't work, then you have to like basically take it back, repackage the whole thing, send it back to somewhere else where we could just like click a button, change a program, and just like
That's
it stays kind of out how
That's
it's
a good
going.
point.
So,
Like I got a call yesterday from a client that just was denied. I don't want to say the lender, but they were denied. The broker submitted the loan. They were denied. The client elected to waive their right to receive the appraisal. So they were denied due to the fact that the appraisal came in short.
Wow.
But the client doesn't even know what the appraised value was because they waived their right to the appraisal.
Oh,
so I'm like, well, where's the appraisal? Because I want to see how short it was to see if I can help you.
Right.
And they're like, oh, I don't have it because I waived my right. So I'm like, all right. So then I look, he's like, oh, I'm like, you're dealing with a broker. So now he's got to go to the bank to get the appraisal.
Try to get it.
When I could have just
done it. Yeah,
done it
we
right
were
now.
just talking about that the other day. Sometimes like in this rate environment, right? Like you might be able to go somewhere and get an eighth better, on the rate, but like you can't guarantee some of those things. Like our appraisal panels are a big part of our process and our benefit here, right? Because you have, people like in Queens, in Astoria are going to get out there and do the appraisal, which could make a huge difference. It could be the difference between killing a deal or making it survive.
100%.
When you're using people that know the market. Sometimes you go to a bank and it just kind of round robins. You don't know. It's just the person that can come do it the fastest.
Yep.
What advice would you have for first-time home buyers as we're talking about this market and what's going on? What would be your advice to them right now, someone that's listening today?
I think, fail to plan to fail type of thing. You really got to get ahead of it early. Even if you feel like you're not ready now, the sooner you begin to evaluate your finances by a knowledgeable mortgage professional, the better off you're going to be, because it's going to give you time to position yourself to make your process as smooth as possible.
No doubt.
And in an environment where there's a lack of inventory and you have to move with speed, like you can't do that last minute.
Yeah.
So what I like to tell people is just there's never a perfect time to purchase a home. Start today.
Yeah.
And if you can't close tomorrow, it means just not right now. I mean, we'll get you in position to get there.
And leave a comment or like go reach out to Raf and DM him if you're, in the New York market or beyond, like maybe you can go to one of your seminars and learn there.
Yeah.
But obviously it's also free to consult with any loan officer, right? There's no obligation. You have a soft credit pull. So it's not like, oh my God, my credit's going to get destroyed. It's a 15-20 minute process to kind of go through, hey, is this going to work for you or not? So I think that's important for people to know.
Yeah. It's such a wealth building like tool, where I mean, you have folks that purchase homes a year and a half ago and already sit on a ton of equity. You know what I mean?
Yeah.
Probably to the tune of what their yearly salary is,
No
in
doubt.
some markets. So it's like you can't neglect that opportunity.
The other day I shared on Instagram like this, tell the story of like the first home you purchased, right? Because there's so much negative news out there. I think for home buyers, like people are so discouraged. But if we all told the story about the first home we bought, I bet it was a good one, right? Like except for the like rare instances where maybe something went really wrong. But for the most part, we're all not that great at saving money, but we are great at like paying our bills on time. You're going to pay your mortgage because you need to make sure you have a place to live. So that home's building equity through time, and then you can keep it and rent it and buy the next house.
Not only that, but your payment is fixed for the life of the mortgage. I mean, look at inflation right now, right? Like, like mortgage payment. I have clients who closed 3 years ago. The mortgage payment's $2,800. That's cheaper than renting a 2-bedroom apartment in some markets.
Yeah,
you know what I mean? And that payment's gonna be $2,800 for 30 years.
Exactly.
So it's just like
it's like you don't have to worry about it going up. Like if you're renting, right? It's gonna go up. And the interest rate on rent is everybody knows it's 100%, right? It's 100% interest that you're paying. There's nothing that's going towards the principal. And every year your landlord's got to raise because taxes and insurance and everything else that's going on, inflation, and then just demand. So what's the market like, the multifamily market out like in Queens? Is there opportunity? You're seeing a lot of investors out there?
Investor appetite, I really can't see. I don't see it as much. I think the prices are just, the margins are just way too thin.
Yeah.
And the deals are hard to get. Yeah. So I mean, I always suggest, especially someone who's coming from an urban area like Queens, is to start with a 2-family, right? I started with a 2-family.
Nice.
It's always easier financing, right? You can use less money, FHA or whatever it is. And it's...
Yeah, so like if you're buying your first home and you want to buy a 2-family, how much money down
3.5% down.
3.5%.
You know,
Wow.
so I mean, so you're talking about, you know, you don't need the 20%, 3.5% down, 2-family. You get some rental income. Granted, the payment's gonna be higher because you have the MI and those factors, and you're taking on a big loan. But ultimately, it's a 2-family investment. So starting out, it's great because that asset now can be a cash producing property for you as you continue to grow as you know, your career, your portfolio, whatever it is. And eventually you can always move from a 2-family to a 1.
Right.
But now if you own a 1, in order to buy a 2, you need 25% down.
Yes.
Right? So 25% down is much harder to come by than 3.5%. You know?
No doubt.
So,
yeah, if I could do it all over, I would hop from one multifamily to the other for the first 10 years of your life before you have kids and you're settled down in a community. It's such a, like they call it like house hacking, but you're really not, right? You're just willing to move once, twice a year. And then, you know, we have all the CCM Community Promise is a big product that we have out.
Huge.
Are you seeing a lot of people in Queens qualify for that based on where they're moving from?
Yes. I mean, I think that's the uniqueness of our product is it's where you're moving from, right? Where do you live?
Tell us about it. Yeah.
Yeah, Queens has some spots that do a good amount. I think the most area, like the most blanketed area, I would say is the Bronx.
Okay.
And a good chunk of Brooklyn. Queens is very weird. Like, I looked at the map and certain areas don't qualify when other areas do. So it's tough, but I mean, it's almost $8,000 in incentives, $6,500 towards your down payment or closing costs, let's call it, a 1-year home warranty, and we reimburse you your appraisal.
Right.
And all we need is where you live now, where you know, like
that's it. There's no income restrictions.
No income restrictions.
So if I live in a certain area in the Bronx or in Brooklyn or maybe even certain parts of Queens, I could
Queens
just
there's a big area.
Okay.
It's just what I'm saying is that you really have to put the address in because one block can actually like put you over.
Right. So you could get almost like $8,000 worth of incentives to purchase a home today, which could be close to covering your down payment, covering your closing costs, just for moving out of a certain area.
Out of your rental.
Yeah.
Yeah.
How about realtors? Are you I mean, I wonder if realtors know about that product when they're going to try to get a listing or something. Are they trying to position that stuff to say like, hey, like let me list your place?
That's a good idea.
Partner with a lender, right? And we could give the buyer, you know, $8,000. It's going to incentivize them to move it. Maybe help us hold the price.
No, 100%. I mean, we need to really get more creative with that product. I mean, I've done a few things on it, but I haven't pushed it. You know, people kind of scroll through, and then you're like, oh, well, they didn't do that well. But then you got to continue to put it out there, because people just keep scrolling. You know.
Yeah. No, it's so true. There's so much out there. I mean, I think we have almost 150 lenders that we work with here. So. It's massive. The products, it's like every flavor of ice cream when you come here, and you have the control in processing and underwriting and closing, and then we're servicing majority of our loans too, or 50% of them, I'd say, right? So
I think there's actually the mortgage statement has your name on it and everything, so that's another touch.
So they know to reach out to you, and that's great.
Which is huge.
Why work with Raf?
That's a good question. I mean, look, I wear my heart on my sleeve. You know what I mean? And sometimes it's a good thing, sometimes it's a bad thing. When I work with a client, like I really, truly, like genuinely want the best for you. Total transparency. There's no ulterior motive outside of putting you in the best position to purchase your home. And communication, like, you know, I don't shy away from giving bad news. Like, unfortunately, sometimes things get bumpy in the mortgage process. You know what I mean? And a lot of loan officers disappear. You know, I turn it around. I said, look, we have to be proactive here. Didn't go as planned. And I always kind of like know when something, I said, look, this is our plan A, you know, and we're going to try to get you this best mortgage program. But here's what I see right now that might prevent us from actually getting approved for this. But I do have a plan B in the event that doesn't work.
I love that.
You know, so like I would never pre-approve a loan that I don't think we can close, you know. So
I could sense that from you. I feel the passion that you have for leading your team, for growing your business, for everything that you've created thus far, and for helping your customers. And you know, I know why realtors and accountants and people are choosing you to work with. I think your market is awesome because of the diversity in it and the opportunity. And I look forward to hearing more about the homebuyer seminars. I'm really glad that you came today. I can't wait to repurpose this and put this out here.
Awesome.
Thanks for taking the ride down to be with us today, Raf.
Thank you for having me.
And guys, go out there.
See where we go from here.
Yeah, I can too. I got to come on your pod. We're gonna get your podcast.
The Bronx. You got to
back
come
up.
to the Bronx. That's where
down.
we'll get it back up.
I'm there.
You heard Ray. I'm gonna do a shout out to Industry Talk.
There you go. Good. We'll tag them too. I would love to do that. So. Guys, please comment, like, subscribe. Go check out Raf. Let us know if we could help you in any way with your home purchase. And we'll see you again soon. Thanks.